TradingNBI.com. This is John. This report is for the 12th of January. Well, as expected, we were looking to get somewhere around the 39.93 plus range, and right up here, the daily has the 4,000, and pretty darn close to that spike of NBI Magenta. Now getting pretty extreme here, 57 range. That's pretty steep. Now, sustainability, of course, it can't stay this well, so it's going to have to pivot lower. The question will be, will we see a white spike back up and magenta move below the 33? So until that happens, we're still expecting an upside bias. Doesn't mean we're not going to get up and down during the day, but overall, the expectation is still higher. When you look at that shakeout, it's just perfect form and continuing rising DOC red. Short's really not active much at all in this scenario. We even have short-term buyers moving into the setup. So again, it was that one-sided push, and it just keeps going. And you can look to the news for this and that various reason, but I think that situationally everything was set for a reversal simply because you had that momentum at the end of the year, and now you've got to have some kind of asset allocation. Only way to go is up with that. Now, how sustainable that is, well, that's going to depend on some of the numbers. Everyone's expecting weakness, and as long as that proves to be the case, then fine. But should things be more complicated, I think that's where it gets interesting, and I think that's more likely what's going to happen. This idea that the Fed is just going to reverse course because things are going to get softer is a gamble at best. But you got to go with what is, and that's where it is. And again, here it is. The Treasury's suggesting the same. This is a continuation move back from before when the realization came in the Fed would be strong, but they're getting lip service back and forth with, the Fed may be softer, this and that, and they're just looking for any reason to say it's okay to buy. And that's pretty much what we're seeing from market forces at this particular stage, because the downside is just too crowded at this particular stage. Oil popping back up, still underneath 80, but getting very close to it. As long as it stays within that range, should be okay. But move much higher than that. I mean, you saw big inventory builds as well as increase in production. So from a supply side, not too bad. Question is, why would price continue to rise unless they foresee some kind of stalling or change in that supply capability? And gold, of course, still pushing those upper limits, and it's going to continue to do so, particularly as long as that threat that softening is not going to happen. Of course, the biggest element change would be if the CPI comes in any hotter than expected. That would definitely cause serious problems, at least from a gold standpoint. That would potentially shoot things up again as a secondary. The euro continues rise. No reason why it wouldn't keep doing that. And moving on, Bitcoin pushing above its 50% for the first time. Similar readings to the market. Not a surprise. We talked about this at 38%. There was just more of a likelihood that it was going to start to build pressure given the discount. You had shaken all the weak hands that existed, so there really wasn't. Now you have a limited supply because long-term holders aren't going to let go of anything, so you got to acquire new. And since the flood of liquidations had taken place, no other way to go. Same with ETH, looking pretty identical there. 50K had recognized that buy from earlier the other day and just continued the same, added to it secondary. Buy position from a 5K standpoint really wasn't a whole lot. You can see we had the previous algo levels, 39.70, and then moving all the way up to the peak of it. And it was just kind of an ebb and flow, and there it was, the previous algo up there at the 93 level. 92, 95 is where it's marked, but We were still thinking 93. Fought between the mid-level zones for a little bit, but every time certainly cut strength. So there was just some just strong buy activity, and every time we reached the threshold, that became new support and built right off of it each time. So we're getting to the point though where the downside can surprise more now than the upside. So it's one of those where the tables start to get flipped. So if anything unusual happens with CPI numbers in that, the potential for the downside moving back down to that 39.30 range or even as low as the 38s, certainly within the cards. It's not showing on our charts for now. Um, so we just have to follow the readings. That's the simplest way. I mean, you get that 5K solid cyan under red. That's always a buy setup. And even the 50K looking pretty strong at this particular stage. So it'll have to be something significant to cause that to reverse. So all in all, fairly simple so far. We'll see if it continues. As always, though, trade well. Talk again later.